All right, let's continue with understanding candlesticks like a master trader. This is one of my favorite subjects. Love talking about candles, bar by bar, putting it all together here. So, becoming a candlestick master. Proper trading is supposed to be proper thinking. How do you know what to think? Well, it's based on the chart, of course. So, as we look at a pattern, right, it's a recurring arrangement of price bars. We put those together. We've seen them in the past, historical patterns, and how they've played out, and that suggests the direction of prices in the direction they're supposed to go in the future. That's what guides our thoughts. So as these patterns occur, and they communicate how traders have acted, what were their beliefs, what their expectations are, and what they think is going to happen in the moment. So as we read that, it creates our own and what we believe is going to happen. And we use that on an ongoing basis in what I call candle language. And they tell us what, as I said, what's happening, and we're going to use them on a continuous basis to guide our thoughts and our trading decisions. I've already mentioned indicators. They're not going to be helpful to you. Gurus of the time that written candlestick books and have websites, the majority of them are using candles in combination with some oscillators, and where they talk about marrying Eastern and Western technicals. Just take the indicators off of your chart. Follow what we've been talking about here. Trend, support, resistance. We'll add the candles to it, as I call it, candle language. What's happening in the areas where they're supposed to. Location, it's very important. Trend and location, because candles by themselves can be totally, not meaningless, but as I mentioned to you in a few slides, a red candle in an uptrend doesn't get the respect that it does in a downtrend. I'm not going to act on a red candle to sell an uptrend short, right? It's common sense. Bearish engulfing pattern, or the different names I tend to forget over time, but you have dark cloud covers or evening stars or whatever the name might be to suggest something bearish. It doesn't mean it's bearish. While there's been some type of a reversal pattern, you always put them in the context of a trend, support, and resistance. Now here are all the names, and those that promote candlesticks in the old way would suggest that you would remember all of these names and what they mean and what they would suggest is going to happen. And there's even more of them. And so to remember these names is totally useless to us for making money. Let's just understand candlesticks as being pictures that mean some type of reversal in the moment, whether it's increasing momentum, slowing momentum, or a reversal. And when we recognize these individual bars, putting them in the context of the trend, that's common sense. We use them to determine who's winning the battle between supply and demand. As mentioned, they speak to us about how other traders have acted. They communicate to others how we've acted, because once we place that trade, our beliefs have been displayed on that chart in the time frame being viewed. So as we change different time frames, and when we get into multiple time frames, it's going to be a big section, and hopefully it's going to be a huge light bulb moment for you in putting what we've talked about already into multiple time frames. And it's what really gets powerful in putting the odds in your favor. And of course, that's what we're all after, putting the odds in our favor, so where we're having a high probability trading opportunity that's going to work out as the charts suggest. So we have to combine these concepts, as already mentioned. Let's start with the beginning. For those of you that maybe you don't have the basics, a lot of you probably do. So let's just go through it and just cover this foundational information, and then we will get into the more advanced part of candlesticks. So for those of you that are starting out, and we start with this basic understanding of a candlestick, meaning it's comprised of a low point, a high point, it's your low, your high. It's got an opening price and a closing price. And you can color these any color that you choose to on your own platform. The majority use red and green, but you use whatever you like to suggest bullish or bearishness. So if the closing price is above the opening price, we're going to paint that candle green. Now we're going to take note of the size of what it's called the candle body, which is the area between that opening price and the closing price, because that can change dramatically depending on where the open and close is in relation to the high and the low. So we could have small candle bodies, right? We can have big candle bodies. We can have long wicks or short wicks. So the candle combinations of what they might look like, it's probably endless. And another reason why there's no point in remembering names, all we need to do is just look at the candle and say, how big is it? What is the size of the candle body? What is the size of the wicks? And then start putting those individual candles in the context of what preceded it. And of course, the trend. And so a bearish candle, or what we're going to paint red, would have a closing price below the opening price. And of course, that has a high and it has a low. And we're going to do the same thing to take note of the size of the candle body and the size of the wicks and the overall range, and comparing that to prior candles. It's really very simple, and that is the goal of our education here at Master Trader, is to simplify your analysis and then putting those simple concepts together to form high probability scenarios and situations to make money. So momentum can slow down in a lot of different ways. As mentioned, these candles can form in so many different ways. But let's just assume that we're starting out with a big wide range bar. So we can see that this candle is bigger than the others. And momentum slowing down. How do we define momentum slowing down? A small candle body or a small range. Simple. If it's at a topping tail, it means the body is in the bottom part here and in the lower half, and it's got a tail above. We could have a small candle body in the middle of the range. Momentum is slowing down. A long tail, and it was a red bar that moved down and ended with a tail and a candle body which was small. So we had an opening price here. Prices went down, they came back up, and they closed here. So it's green. We look at that as bullish. A bottoming tail we look at it as bullish, but a small candle body tells us that there was slowing momentum. Just a small candle, narrow range candle. Any of these means that momentum is slowing down. And here you have the red versions, which say that the closing price is below the opening price. Very simple. Let's continue. Wide range bars and narrow range bars. So we have here a big green bar, right? And we just say, well, its range is wide compared to what preceded it. Is there a number? No, because we could be looking at a stock that trades, it's a $300 stock versus a stock that's a $2 stock. So it's a visual that we look at to say, hey, that candle was wide compared to the ones that preceded it. So if we had a consolidation and we saw a big wide range bar, we would take note of that and say, that's a wide range bar. And then if it was preceded by a small one where the high and low was close together, we say that's a narrow range bar. Simple. If there was a green bar and it turned into a topping tail bar, well, it was bullish prior to completing its time period, and then it turned into a topping tail bar, and we say that sellers took control. Very simple. Now, put it in the context of a trend. If this is in a downtrend, well, that would be a whole lot more meaningful than if this topping tail candle formed after initially coming out of a base. We'd still recognize it as sellers taking control, but it wouldn't be as meaningful as if it was in a downtrend that was up at an area of resistance. It's all common sense. Small candle body, small tail, put it in the context of, I said, trend, support, resistance. wide range red bar. Prices had moved lower. It turns into a bottoming tail bar. We say buyers took control. Was it a big bar or was it a little bar? As you would imagine, big, wide range bottoming tail bars are going to be more meaningful than small ones. When we look at candles, or trends, any kind of chart, we recognize that it's a representation of traders' beliefs. So, with that being said, if you were to see a wide range red bar, you would obviously recognize that as a representation of a lot of selling with a big bar like that. It was emotional. And if that turned into a bottoming tail bar by the end of its completion, right? So let's say that it was looking like a big wide range bar at 3 o'clock in the afternoon, and by the close of trading, it looked like this. Obviously, buyers took control in a pretty big way. Now let's put that in the context of what preceded it. Is it in an area of minor support? Is it in an uptrend? Is this happening where multiple time frames are in alignment? The odds are going in our favor. It's happening rapidly at times, and at other times in slower markets, it can be slower. In any event, your job is to put these pictures together in multiple time frames and the trends that they're forming. Now, this is an important slide, and it's important because it gives you an understanding of multiple time frames, and in addition, frees you up from the thinking of, is this one type of a candle pattern versus another? Meaning, is it, let's just say, a morning star pattern or a piercing pattern or a bullish engulfing pattern and such? Because as you change time frames, the picture changes. So if I expand the data, go to a smaller time frame, I see more candles. And that's going to change the pattern. And if I compress the data, let's say that 3-bar reversal, I compress the data and it turns into a 1-candle reversal, the meaning is still the same because it's really about retracements. Right? It's the fact that prices went down and they retraced back up again. In a smaller time frame, prices went down and they retraced back up again. Prices went down and they retraced back up again. So all of these mean the same thing. So understanding that, we now have to apply that to the time frames that we're using. All the same, depends on your time frame. So get rid of the hype about candlestick names. You're going to think like a master trader. You're already doing that. So within the time frame that we're using, we'll recognize the size of these candles and how many are there as we recognize turning points. The more candles that are there in the time frame that we're looking at means that obviously more time has gone by. And the power of that is that in a smaller time frame, there are these attempts, in this case, to go up that are failing. So as I see this type of reversal, let's assume that this is a weekly chart right now. So over the course of 2 weeks, we have 10 trading days. So within those 10 trading days, if we were to take an X-ray into here, we would see attempts to go up that were failing. It might look like a base that went sideways and it went down on one bar. We don't know. What we want to take away from here is, as we're looking at what's happening here, if there's more bars, the smaller ones are least potent, and this is becoming more potent. And we're getting into some bar-by-bar analysis here. So if we look at the second example, you recognize that this gapped higher and then failed and retraced deeply into that green bar. This one gapped lower. It tried to go up and formed a topping tail and failed and closed below the low of the green bar, bearish. Wider range bar where prices gapped above and then traded down and below the green bar. Obviously more bearish, wider range, deeper retracement, and a 3-bar reversal. wider bar up, attempt to go up. That was a green bar. It turned into a topping tail bar, and then it opened in that area and traveled all the way back down below the low of both lows. So the size and number of candles over time increases, which increases the potency of the reversal. Of course, that's in the time frame that we are viewing. So we look at wide range bars. We're going to consider them and these candles' effects, as always, on emotions, and we're thinking in candle language. I've already shown you narrow range bars, wide range bars. Is that bottoming tail also a wide range bar where there's been this range expansion, either bullish or bearishly? So narrow range bars after a move indicates momentum has slowed. The simple concepts of reading these candles on a continuous basis. Wide range bar displays commitment and emotion. So if it's a big red candle, there's commitment to the downside, there's fear, and now we have to look at that big candle and say, is it starting a move or is it ending a move? Wide range bars, they're range expansions by definition. When we look at bottoming tails and topping tails, they may or may not be, because a bottoming tail bar could be a narrower range or it could be a big range. So if it was a big range bar, there was all of this emotion that was occurring at the time to the downside, and it turned into a bottoming tail bar. So there's been this expansion in range to the downside, turning into a bottoming tail bar, and that's a strong signal of a turn. As mentioned, wide range bars can end a move, or it could be the start of a move. So we have to look at what preceded it. Right? What was the trend prior to that? So looking at these candles, upper left, we have a potent reversal. How do we define that? It engulfed the prior candle. It was down at the low, and it went all the way up. And that's a big, potent reversal bar. And if we put that in the context of a pullback to minor support in an uptrend, that's a powerful signal. I always say this one, well, it's not that potent, but it doesn't mean we wouldn't take it as a trading setup under the right scenario. Here we say this one is potent. It gapped down below a green bar that closed at the high. So that's a powerful signal, a bearish signal. Now here we say, well, that one isn't potent. Well, why not? Well, while it gapped up and reversed, it didn't penetrate very deeply into the green bar. And if we look at this from the point of view on a closing basis, it just closed here and it closed here, pretty close together. Now, wide range bars, is it ending the move or is it igniting a move? So that a wide range bar that comes after multiple bars moving to the downside, we view that as ending a move. Whereas a wide range bar that might come out of a base, we view that as igniting a move. And as prices move down at this point, and we see that the ranges are beginning to narrow, we say, well, momentum is slowing down. But there isn't a lot of fear associated with that. And that kind of situation is where we would like to see a retracement actually to short a situation such as that. Whereas this situation, if it was to retrace, we know that this has been a climactic move to the downside. I'm not so interested in shorting that because things have gotten too emotional and extreme at that point. Wide range bar, igniting a move. Maybe it came out of a base again. That's our favorite scenario. A wide range bar after a quiet period of consolidation. It could even be a W type of a bottom. In other words, some type of corrective action, and then the wide range bar. Now here, when momentum slows down, we say, well, there's not a lot of greed associated with that. So this would be great if it pulled back a bit, or maybe even went sideways, and we buy breakouts. Things haven't gotten extreme yet, whereas the wide range bar ending the move, multiple bars moving up, that scenario is not one in which a breakout, unless it was a lengthy base where, and we haven't gotten into moving averages yet, but it would be one in which, say, the moving average was extended, but that base was long enough to where the moving average would catch up. And we'll talk about moving averages as visual aids. So what we're seeing here is the length of that base over time helps to dissipate the extreme and emotion that occurred with this run-up and wide range bar ending the move. So there's a lot of thought process or psychology behind the candlesticks as we view them, as we're reading fear and greed and expectations and putting that all together, as always, with the other concepts, trends, support, resistance, and such. So here are your three candlestick concepts, as I've already mentioned. Momentum is either slowing down, it's increasing, or it is reversing. A price can only be doing one of them at a time, but it can form many different ways. I showed you different ways of slowing momentum or reversing. We recognize that first, and then we put it in the context of the trend. And very importantly, the location of where it's happening. And it says, lastly, the message that occurs, does it actually follow through? Which can be even a stronger piece of information to help us make money, meaning a red bar ignored. When we see a red bar clearly, it tells us that sellers took control. If it's in an uptrend, we say that, well, it should be ignored, but is it ignored? Does it happen in a consolidation? And if that doesn't follow through and prices retrace all the way back up to the top of it, that's powerful information. So as we look at these individual candles, we say, what is the message here? Does it actually follow through? What is the trend? What is the location? And all of this comes together to, as I said, become very powerful information. Here we have all of the different names of candles. And just to reinforce for you that this is nothing more than recognizing momentum increasing and retracements, regardless of what you call it, right? A bullish hammer, we call this a bottoming tail bar. Where prices went down, it was a red bar. It's become a bottoming tail bar. In this case, one with a green candle body. What is the trend? What is the location? A bullish harami. It's an inside bar. Simple. Trend and location. Bullish thrust. It went lower and it moved less than halfway into the prior candle. I can see that. I don't need to think about names. Piercing patterns move more than halfway. So I'm explaining this because if you've read any of the candlestick books or websites that explain all of these different names and what they mean, you might be caught up in that thought process. And we need to neutralize it and simplify it so that you recognize these for what they are. Nothing more than changes in momentum and how bullish or bearish are they. And we simply do that by just recognizing the size of the candles and in relation to what preceded them, and as mentioned, the trend and location. So we've got bullish examples and bearish examples. And now that I mentioned that, you can forget all those names and simply look at the candles that form and the level of retracement. What we've done here is provide you tools for interpreting candle action. Next, we're going to look at bar by bar analysis. I've already mentioned it, but we're going to look at it in more detail. And it says, realize that these patterns form differently all the time. But you put the parts together, you're always going to know the message. And that is the power of bar by bar analysis. Is once you know what one candle means, put it in the context of what preceded it. What does the next candle mean? And the next and the next. And put that together, trend and location, and you're becoming a candlestick master. And it is simple. So, thoughts. You don't need to remember names. Don't try to remember names. It's about trend, support, resistance. I don't know if there's 50 or 100 bullish and bearish patterns. It's ridiculous to even think about them. Right? They're good visual representations of reversal signals. Now, you can recognize that with a regular bar chart. Why use candlesticks? Because it just makes it easier. Right? If the pictures jump out at us, once I know what the picture means, right, I just look at it and instantaneously I said, oh, that's a reversal pattern. Next thought is, what's the location? What's the trend? Is it a big bar? Is it a little bar? Is it a bottoming tail bar? Was there follow through or not? As you put that all together, right, our goal is to put the odds in our favor. Right? So all you need are these price boards. When I say all is secondary, what I mean by that, and we'll talk a bit about it, is volume. Many make a big deal about volume. Our primary focus with volume are volume spikes, because that just means there was a lot of activity there. There are other analysis tools that may help you. We're going to talk about moving averages, which we use a lot in different time frames. And when you understand how we utilize that, you're going to see how powerful it is. Let's move on to the next section. Review this information. It'll become second nature over time. I'm explaining a lot, and of course for your benefit, but reviewing it will reinforce it, and you'll see how powerful it all becomes as we put it together.